Hello everybody, it's another video. I'm here in another video and I want to show you how I break down the markets on an everyday basis and how I get my entries sometimes on the markets and how I trade the markets. Use SMC. I use SMC trading strategy. Yes. So this is what we have on H4. This is what we have on H4. We got a huge rally up and we got a little bit of retracement there. So I'm expecting that price would actually push higher, whether it be during the news time. I have no idea on that one, whether it be during the news time or non-farm payrolls or something, I don't know. But anyways, we're expecting that price should push up, take out these highs, and maybe come back down to take out these prices over here. Let me just remove that so that you can be able to see. Just remove all the drawings. Yeah, so that we can put so that the price can come down here. Then we head all the way up. But anyways, price has to push up first of all. Price might actually push down. I don't know what might happen, considering that there is this area of interest as well. This area here, it's a previous order block, as you can. Let me just show you from the previous. As you can see, it is a previous order block in this area, so it's a very interesting area. So price, why I'm saying price might push up to take out these two highs over here and come into this area, or even push further higher. Looking at the dollar index is also is losing big time, so we might expect, oh sorry about that, let's open the H4 time frame so that we can look at a bigger perspective, because the dollar index is going down, so we might be able to push price to the downside before we can head back up to that order block or this order block right here. So yeah, we're expecting that price should do that. So NFP, we're bearish on the dollar and bullish on these other pairs, the best, the gold pairs. So then I break it. We'll just break it down to the H1 time frame. See what's happening on the H1 time frame. As you can see, H1 time frame, we have that. We have equal highs up there. And we have this hour is about to close down. It's about 5 minutes left, so there's probably going to be this imbalance that's going to come. Probably the market's going to push up, then push down, then during news time it's going to push all the way up to above these levels here. The market might do that. Then later on in the coming time, the market might actually come down all the way up to this bearish order, this bullish order block here, so that we can take the market back up. So let's break it down also to M15, so that we can be able to get maybe an entry today. Maybe we can be able to get something out of the markets today. Okay, M15, what do we have? It looks like the market came and created a change of character there, took out the equal highs, created a change of character there, and but I cannot attest to this trade because I'm looking to go bullish on this on the markets today. I'm looking to go bullish. So what I would rather wait for is the market to give me a move downward to this order block here, as there's this change of character that is formed. So I'm looking for the market to give me a bearish move to this, then we can take the market way up, because I'm looking bullish on this market. There's these equal highs that have to be taken out, might be taken out right now to create a bigger charge, and then from there we'll be able to get back up there onto the markets as they move. We can get maybe something like this, something of this nature, or we could get something different from that nature, something maybe of this nature. I don't know, but I'm expecting that the market should actually go all the way higher than that high over there. So let's just remove all those drawings over there, and let's take it down to the 5-minute chart. 5-minute chart. We're entering on the 1-minute chart, ladies and gentlemen. We're entering on the 1-minute chart. So on the 5-minute chart, we have that. As you can see, we have a change of character there. what did we have? Looks like we missed a little bit of an entry on the 5-minute time frame right over there. We missed that entry over there because we had a change of character right over there. After there was a change of character here, we had another change of character here. So since we were looking to go bullish, we were supposed to grab an entry here or here, but mostly I'd be looking at the 50% of this order block here. That's where I'll be looking for my entries, right here on the 50% of this order block, which is somewhere, sorry, I used the wrong tool, which is somewhere there, 50%. So our position would have been triggered. Let's see, using there's our position there. I think we use a very small stop loss, maybe with our take profits, right? Right at this area here, exactly at that area there. Because that is where there is a bearish order block, hey? So we might want to get that and bring it down with our stop losses. Nothing more than 10 pips, nothing more than 10 pips. So we'd have a stop loss somewhere there, maybe even a 10 pip stop loss. It will be somewhere in this area here. But I usually like to keep it at 5 pips. So somewhere there. It would be almost there. We would have almost hit SL, but nevertheless we did it and would have gone up. I like to keep it at 5 pips stop loss. So yes, we missed that trade over there, but nevertheless we might be able to catch the next one that the market could unveil to us, hoping that the market could unveil. So let's break it down to the M1 time frame so that we can be able to understand some of the concepts that I use. Okay, so on the 1 minute time frame, we can see the market is moving up and down and up and down. We could say that's a trade. No, we're looking to go bullish. Okay, so in the 1 minute time frame, we have two areas of interest. Which I'm looking at, which I could actually buy from. The first area is this area here. This is the first area I'm looking at after this break of structure. I'm looking at this area, and the second area that I'm looking at is this area here after this change of character is created. So I'm looking at this area here as well, so that I can be able to buy from this area here. So I take my Fibonacci, I measure that area from here to there, zoom that in so that we can be able to see clearly. Then I look at the 50% mark. That's where I go long. 50% mark, because this is an area, I would rather have a 2 pip stop loss than a 5 pip stop loss, because price might actually run through that area and we're going way above those highs over there. Our take profit will be somewhere there at 42 pips. So yes, I could have a position like that. This is what I'm thinking would actually happen. And I could have also a position right over here. Just do that as well so that we can be able to see position right here. As well, and we have a long position there on the 50% mark. Yes, with our stop loss right over here below this low here. Okay, which is a 2.5 pip stop loss. Not bad. It's a good stop loss, and our take profit being all the way up there. So remember, when you get maybe a 1:3, you can close some of your positions and let other positions run. You can close some of your positions and let other positions run as well, so that you can be able to book some profit, because we're here to make money in the forex market. Yes, as much as we're also here to learn the skill, but we're also here to make money as well. So you can take some of the positions in them. That is how I take my positions. So if I were to risk maybe $100 on the first one here, maybe I'd risk I'd make my risk a little less, maybe 0.1%, 0.5% of my account, and then on the second one I'd risk maybe 1% of my account. If the first one hits stop loss, well, it's still fine. And if the second one hits stop loss, that's still okay. I'd have risk 1.5 of my account, 1%, 1.5% of my account. So always practice risk management. Always use risk management. Don't let emotions hold you back from being a good trader. So I'll let you know how this trade goes at the end of the day. Have a great time, and remember, there's NFP today, so there's lots of news. There's going to be lots of volatility in the market, so be careful out there, and happy trading. I wish you a beautiful day. Hello once again. Shall like us to look at the trade that we said we were going to take in the morning. As you remember, this was our trade in the morning. So we're hoping that the market would either come here and go all the way up to there on a 1 minute time frame, or because we have this area over here, this interesting area over here, which is liquidity, and as well we have that order block. So we thought maybe the market would actually come back to that area and buy from there. So yes, we had an order block here, so I took the position on 50%. So, and also at that time the market was around this place over here, was up there. So we thought that the market would come maybe if they take here and then they take us up without them going down. But anyways, we had a very tight stop loss of 2.5. So if we go into the future and see what happened, NFP has already occurred. I was actually looking at it as it was happening. I didn't remove my positions as I still thought my setup was valid. Nevertheless, it's a learning curve. I get to learn. So I made some losses here and over there. So I made some losses there because I didn't remove my positions, but I didn't lose so much from it. I didn't lose so much. So I just lost 2.5 pips and 2.5 pips, which is around 5 pips in total. Yes, so that's what transpired today. So some of the trades I took today on NFP, I had a bullish mindset. So yes, my bullish mindset. Well, I was wrong to think bullish, as you can see here. I thought there was a break of structure, so after the break of structure we should be able to take some positions there, which means removing those that liquidity there. So as I saw that, I thought maybe this was the order block and price it came to hit there, because that is the order block. Price came there, rejected off of that, and price shot up. So next thing I thought, bullish candle, boom, it was gonna go up, but nevertheless it shot all the way down. So yeah, I did get into a few profits, and price went down and took me out. I had a very short, just like always with 50% there. So I had my take profit way up there because I was targeting lots of pips. I knew that maybe it would move about 100 pips or so to the upside, and I had a very short stop loss of about right below there. So I had my stop loss right below here. So yeah, and it was a 5 pip stop loss, so I lost there again. So it's about 10 pips that I lost today. And then after the news occurred, I looked at a higher time frame why the news could sell. I went to H1 and I looked at H1, and this is what I saw. On H1. Let me just show you. This is what transpired on H1. So on H1, this is what I saw. I saw that we have a base rally up over there, and price shot all the way and ended there, as you can see here. As you can see over here, let's just put it on the dot exactly. On the dot exactly on the wick there, and on the wick also the side. Yes. So this is what I saw on H1, and I thought, well, the market is likely to reverse over here, and I started seeing. I saw that no, maybe the market might actually go up from there, and it just came, and I saw this huge break of structure, and that's what gave me that says, well, why don't you just buy within the market? And again, I was afraid that maybe the market might drop up to this area, and it might drop up to that area because we have a change of character over there. But since we're bullish all the way, I was like, let me just see what happens and just hold it. So I'll show you the position right now in the next screenshot right now. Okay, so that was a position, and let me scale it down for you so that you can see why I took the buy over there and where I took the buy. So as you can see from M5, and I saw that from the H1 time frame, so I scaled it down to M5 time frame. As you can see in that area over there, price tested there the first time, it went up, tested there the second time, it went up, tested there the third time and went up, and closed below that, closed here. So when it tested there the fourth time, I wanted to enter my position right over here, though I couldn't enter it there. So I decided, you know what, let me just let it run a little bit. The moment I saw that they were about to go up, I entered my position right over here, and also was looking at the 1 minute time frame. So I entered my position here without a stop loss. That's when I entered my position. I entered without a stop loss here. So I was saying that if price drops all the way down here, I would close my position right down there. So that was about, I was at 22 pips risk. I was very much, it was a big risk that I had taken there, and it wasn't quite healthy. Always manage your risk. That guys, always manage your risk and be careful out there. So yes, right now the trade is still running, and it is about, let me just put that there. The stop loss, I've already placed it at break even. I'm planning on closing my positions right over here. I've closed already half of my positions, so you could say, let me just get it down to an M1 time frame so that we can be able to put a tighter stop loss. So yes guys, this was a very risky trade. So on M1 time frame, what I saw was this. When I saw price coming here and rejecting off of that area right over there, and rejecting off, creating that break of structure, I was skeptical at first, but I was like, well, and I saw this consolidation here, so I assumed, well, price now has to go down and come up. So when I saw price go down, then come up, then come down this area, like I said, I wanted to enter my position there. I couldn't, so I entered it somewhere there, and I managed to book all this. Over here. So I'm still backing all that. And why I thought the price would actually go up? Well, usually after news, after a rapid speed like that, the market would want to correct this whole movement here, this whole impulse. So there's a correction that is currently happening. It might end here, it might end up, it might go even further higher, I don't know. But well, my TP is over there. So this, if I were to actually, because right now it's a risk-free trade, so I would say, let's just put it on that candle there. So I would say it's I would say it's a risk-free trade. I would say it's a 1:104 pips. My goodness, 104 pips. So on 0.1, we're looking at $104 on 0.1. and on one you're looking at 1,400. So yeah, it was quite so I closed down my other positions. I closed down 0.90 and left 0.01 to run, and 0.1 0.1 to run. So yeah, and also we can look at the DXY. As you can see, it's covering up all this gap and imbalance here, so it has to come all the way down here, and maybe that's when it can start going up. But anyways, we're looking lower for the dollar. For the dollar index, long term was, I think we're looking lower. As we can see on an H4 time frame, a wick was forming, giving us, well, let me take that off, sorry. Let me just remove all the drones. Okay, there's no drones anymore. As you can see over here, we had drop base drop. There's a drop base drop, so 50% of that, then the market decides to come down, and we were supposed to be heading all the way down here. So yeah, we're still looking weak for the dollar. So meaning that for the GBP, we're still looking to go higher, and also other pairs like the EU we're looking to go higher. Just put other pairs on the screen so you can be able to see gold as well. I want to trade gold, but well, it's too risky for me right now. It's too risky for me to be looking at that. So yeah, so we're looking at gold. Okay, gold 5-minute chart. There it is. It's too risky for me right now to actually go into gold, and we can see over there gold was actually clearer than I thought. It wasn't a buy as such. It was a sell. It was a good sell on a 5-minute time frame, as you can see. We have a break of structure, but well, that one was that candle. So break of structure, we're supposed to return it back here on this place here. So we're supposed to look for short positions over there, somewhere here after seeing this long wick here and all that. So we're supposed to look for short positions here. Then when the news came, just with some tight stop loss right above the body of this candle after entering a short position, or right above the wick over here, and looking for shorting the market over here. So yes, that's all there was for that trade, and NFP did pay. As you can see, paid a little, not much, but well, it is the markets. They do that which they want. So yeah, that's all there is for today's video. Thank you very much for watching, and come again next time. Don't forget to subscribe and like the video.